generally you'll find people don't like to talk about money. What are your goals, right? If I've got a burlap sack on my back and change in my pocket, and that's all I've got, I should be worried about my finances, right? Because I
All right. Welcome to Jerome in Real Estate. I'm Jerome, your local realtor here in the Fountain and Colorado Springs area. Today, I have brought on Mr. Stephen Thomas, a personal finance advisor and just a financial guru in general. So, Steve, why don't you go ahead and introduce yourself for the people?
Well, thank you, Jerome, for having me, and it's a privilege to be able to talk to folks about finance. A little bit about myself. I recently retired from the Army after about 22 and a half years. And for those familiar with the military, on the enlisted side of the force, you know that we don't make a whole lot of money. And when I turned about 30, was a E5 in the Army, sergeant. And as my children were getting older, I realized I really didn't have a financial plan for the future. And so that said, I began reading a lot of financial literature, to better understand what personal finance really entailed. I also had a passion for teaching and mentoring, with my experience in the military, which also motivated me to ensure that I was educating others as well in the process. That's why I wanted to be a financial professional and really help people understand what finance and personal finance really entails.
Yeah, and that makes sense, man. I definitely appreciate you sharing a little bit of that story.
Yeah.
For me, as far as personal finance, and one of the things that kind of flipped the switch for me, I'll tell you right now, it was a book, and I think everybody has heard of this book by now, but Robert Kiyosaki wrote a book called Rich Dad, Poor Dad.
Yes.
When I read that book, it's like a switch went off, and I was like, oh my God, I've been thinking about money, assets, liabilities, all wrong my entire life. You know what I mean? And once I finally, read that and I could understand it, that's actually what threw me into trying to find out more about real estate. Right now, I don't know, what one thing, you might be able to throw out there as far as, what's most important to me. For me, it's real estate. But if you could pick one or a few of the most important things that someone should know about financial literacy or personal finances, what would you say that is?
I think to me, number one is understanding where you're at with your finances and being honest with yourself about it. I mean, generally you'll find people don't like to talk about money. And when they start to talk about their financial situation, things kind of get a little scary. And I would just say, don't be afraid to go into that dark room, and turn the light on and clear it out, and getting things in order. And I think that's one of the most important parts is, being honest with yourself. And then once you have an honest assessment, hey, do I have a budget? I think that's one of the most basic things that a family can have, a family or individual is, okay, we have incomes coming in. Okay, how does this cash flow in and out? All right. Do you know what your total assets are worth? I mean, that's important. Like I said, that's part of that dark room. Like you may not want to know the answer to that question, but it's important in understanding where your finances have the potential to go. Okay.
Man,
Yeah.
I definitely feel you on that, man. Like to this day, I still have a little bit of angst talking about my money.
Right.
You know what I mean? I can talk about other people's money all day,
Yeah.
But when you're looking at yourself and you're trying to be honest, and if you've got a significant other or a spouse and you're trying to make sure that both of you are on the same page and you need to actually open the books up and
Yes.
talk about it,
Yes.
man, that's rough. Like, how do you how do you get there? You
Yeah.
know?
And it's to get there, you just have to be honest with yourself, right? Um, and what are your goals, right? So, what whether it's short term, intermediate term, or long term, where do you want to go with your finances? Is it do I want to save for my children's college expenses, or am I trying to buy my first car or my first house, or I'm trying to pay off my credit card debt that may be getting out of control? So, so in that, knowing what my financial liabilities are, do I have a high interest debt? You know, what steps am I taking to grow my assets, right? Uh, and most importantly, and another thing that people don't like to think about is, do I have a plan for my estate in the event of my
Mm,
death, right? So if you're
got
the
you.
primary earner in your house and all of a sudden you're gone, do you have a plan in place to ensure that your family can sustain that standard of living that you may have become accustomed to, and that they don't have to take steps back?
Yeah.
Um,
Okay.
so I think
I
that's
hear you.
yeah.
So let's try to switch it just a little bit here. I'm gonna throw out a little bit of a random, not a random question, but I kind of want to know what you believe some of the biggest misconceptions are in personal finance, and learning your own financial strategies and stuff. What are some of the misconceptions that you're seeing out there?
Honestly, I believe that one of the larger misconceptions is, I have to have accumulated assets, and I need a level of sophistication, you know, in order to be worried about financial education. If I've got a burlap sack on my back and change in my pocket, and that's all I've got, I should be worried about my finances, right? Because I can grow those assets in my hand. That change, I can grow those assets. And
Yeah.
having an accumulation mindset is important when you begin to talk about financial education. Understanding your family's cash flow, where your money's going daily, weekly, monthly, and then on an annual basis. I think it's paramount to educating yourself, uh, and those in your family about finances. So so basically, the answer to your question is, I think one of the great misconceptions is, hey, you don't need to have a lot of money to be worried about financial education. You just have
Yeah.
to have a goal, have goals in place with whatever you have. Um,
Yeah. So you're saying, I mean, it doesn't really matter how much you have. It just matters that whatever you have a goal to make it at least one or two steps better. You know what I
yes,
mean? That makes sense.
absolutely, absolutely,
Okay.
absolutely.
Got that. Got that. And I mean, everybody either is there right now or has been there. You know what I
Yeah,
mean? So we definitely need to be able to prioritize and get those goals in order so that we can, make the steps to get there to wherever it is that we want to get to. And that makes perfect sense. So I
yeah,
appreciate it.
yeah.
So what about, just give us some quick tips then on how we can start changing our financial situation for the better.
Okay. Um, so of course, not being all encompassing,
Right.
but these are some of the things that I believe to be important. Um, and number one is paying off that high interest debt. You know,
Okay. Yeah,
um,
we hear that a lot. We hear
yeah.
that a lot.
So during the pandemic, I know we were doing a lot of spending on maybe buying a new TV, or maybe a new car, maybe a new living room set, or pay off that high interest debt.
Yeah.
Because in order to effectively save and grow assets, you have to grow your assets at a greater rate than your liabilities, right? So your liabilities are growing if you're only making that minimum payment. So if my assets are growing at a rate of 8% annually, and I'm paying 15% on credit cards, what am I doing? You know, why, why am I saving? Um, so that's paying off high interest debt. Number two, that emergency fund. We always hear about the emergency fund, but
We do.
it
We
is
do.
critical. Okay, uh, you hear 2 months of pay, 3 months. Look, I I would I'd like to have 3 months of incomes, saved up, 6 months of income saved up. But I would say minimum have at least 3 months of income saved up for that rainy day, and don't touch it. You know, make sure it's in a savings account that's accruing some sort of interest, or a money market fund, or somewhere, and that it's easily accessible.
Okay.
All right. Um, Next, I would say once you've tackled that debt, you've got that emergency fund set, make sure you're saving at least 10% of your monthly income. All right. Make sure you're saving. Now, the vehicles that you can put that money toward, well, that's going to be up to you. That's based off of how fast you want your money to grow. Maybe when do I need this money? Am I saving for a down payment for a house? Am I saving for a down payment for a car? Am I saving to pay that first semester of tuition for my son or daughter? So ensure that you're saving at least 10% once you've tackled that debt and have that emergency fund, and then have a plan. I think that's the most important part of financial education and personal finance, is having a plan, right? So you're setting goals
Yeah.
in the short term. Hey, look, I want to save $2,000 this year, right? And I want to put it in a mutual fund, or I want to save 2,000 and put it in a CD, or I want to buy maybe a treasury bond, and I'm all very safe types of investments where you are still growing your assets, right? And then intermediate, like maybe in 10 to 15, where do I want my money to be at? And then long term, hey, I want to maintain this standard of living, right? So how much money am I going to need? What's my number, right? Whether it's 2,000 a month, 3,000 a month, 5,000, or and beyond, depending
Yeah.
on your ability to save and really work, put those assets to work. You know, your assets can work hard, or they can be a little lazy. I prefer my assets to work hard, but if your assets are working hard, you're taking a little more risk, right?
Yeah.
So, especially during the downturn in the market, if your assets are working pretty hard, you're probably seeing your your brokerage account, or your 401k, or your IRA might be taking a little dip. But
I hear
I,
you.
I would say, and that here it comes to the next thing I would say is just be patient, because downturns are going to happen, right? Um, last couple of years, I think we had a little euphoria, you know,
We
in the
definitely did.
yeah, in the
Some people are
market.
still living
Yeah.
through that euphoria.
Yes,
They're
they
about
are.
to learn a hard lesson, though, I think.
Yes, they are. Yeah, and I know you've seen the signs in your
Yeah.
field in real estate. So yeah, so those are just some things that, like I said, not all encompassing, but just some things that if if I meet somebody that knows nothing about finance, that's what I'm going to tell them.
I got you.
That they should.
So let me ask you this, though. So this is going to be a hard question here, right? Um, so there's a ton of information online, right? Um, I just got you to tell everybody basic principles on how they should set up for either financial education, or setting some personal goals to make sure that they level up a little bit in this financial game, right? Get a little bit of prosperity. So, I mean, if all the information's out there, what truly is the benefit of enlisting someone else or hiring a professional to actually advise you with financial planning or advising, right? What would you say is the greatest positive?
Number one, I'd say time, right? So a lot of us are working professionals, and we value our time off, our time away from the computer screen, our time away from, if we're whatever our profession is. We value our time with family and things like that. So a financial professional, what they can do is, yes, there is a wealth of information on the internet, and that's how I learned to be a financial professional in the beginning. I read a lot of financial literature. I listened to educated individuals in the industry, and that's how I learned. But I spent a lot of time doing that. I spent my free time, and I had to sacrifice to do that. So
Yeah.
I think enlisting a financial professional allows you to not have to worry about it to an extent. All right. Of course, you're going to have to review maybe quarterly, semi-annually, annually your account statements to make sure everything's is going right. But that doesn't take a lot of time, right? Your financial
Right.
professional is actually the one in there on a daily basis monitoring your investments to ensure that the growth is meeting that the goals that you have set. You know, your risk aversion, the amount of risk that you're willing to take matches with where your assets are at. So look, I'm in the financial services industry. I'm not telling anyone to go get an advisor. Look, if you have the time, you can absolutely do it yourself. You can absolutely do it yourself. You don't need to hire a financial professional. But if you don't have the time, and if one of those people that don't like talking about money, you know, yeah,
Yeah.
your
Yeah.
fiduciary, your financial professional, that's a that's that's that privilege between you two that nobody else is going to know about, and only you two can tackle and work through the intricacies of your your financial situation.
Right.
So um, so it's important that people understand as a fiduciary, it's my responsibility. I'm a licensed insurance agent, financial professional. It's my responsibility to have your goals at the forefront. Not so I don't my wants and desires don't exist when it comes to your financial situation. All right.
Right.
If you don't want to take risk, if you want to be safe and invest in bonds and just generate income over a period, I'm gonna show you the best way to do that for your situation. So as your fiduciary, I'm ensuring that I'm taking care of you to the fullest. Um, and
Makes perfect sense.
yeah,
Makes perfect sense. And I can definitely relate to that. I mean, as a realtor, it's pretty much the same type of situation, right? Because, you've seen them all. You've seen people either trying to sell their homes on their own, right? They've got the for sale by owner signs. You see people, trying to do purchases completely on their own without the assistance of a realtor. And can it be done? Yes. Did I used to do it? Yes. Would I recommend it? Right. No. Right.
yeah,
Because those one or two times that the situation becomes just completely untenable and you don't have the necessary experience or the support or the backing to actually maneuver your way through a situation, then you realize why you should have had an advisor, right?
yeah.
And so I definitely relate to it 100%.
And
Um,
we're not that expensive either. I think that's another common misconception is having an advisor is not an expensive venture. I mean, I think
got you.
commonly if you have assets under management, your advisors 1% of that is what the fee that your advisor is going to take. So it's
Mhm.
generally inexpensive, and talking to somebody like me is free, And I would say a conversation is free. So anytime you can pull as much information from somebody like yourself
Right,
or myself in just a casual conversation, hey,
right.
I have no issue with that as well. So
And that's another area where I think we're definitely aligned is there's nothing wrong with providing people with information
right,
and a conversation
yeah,
and just getting it out there because a ton of this information is out on online anyway, like I alluded to, a couple minutes ago. right? It's all out there. It's just who has the time to actually aggregate it all and sit there and study it and
Right.
sacrifice, you know what I'm saying?
Yeah.
So yeah, I definitely understand. So let's move on a little bit. I was just talking about, I definitely focus on real estate. That is where I really, kind of narrowed in on when I started truly thinking about um, finances and how to build, right? So as far as real estate as an investment vehicle, I kind of want to know your specific thoughts on it. What do you feel about not just real estate in general as an investment, but this particular market that we're in right now?
Yeah.
Give us some thoughts on that.
Well, to the first point, I believe that once your personal financial situation allows you to, you should invest in real estate immediately. Because what's the old adage? They're not making any more land, right? So
Right.
anytime you can get your hands on some real estate, you need to do that. And to your point of right now, so real estate is an asset that appreciates in most cases, right? And it's one of the best tools you have to combat inflation. And what's going on right now? We are in one of the greatest inflationary periods since the 1970s. I mean, if you look at the consumer price index, which is monthly, right? We've been over, don't quote me on this, but I would say at least 8%.
Yeah,
For
that's what I was
past,
thinking.
yeah. So if you can buy a house right now, I mean, I can tell you, I bought a house a couple of years ago, and I'm killing inflation just based off the market that I'm in. In
Killing
Colorado Springs,
inflation.
yeah. But I would say right now, while the stock market is in decline, your house, the land you own, is appreciating. It's gaining value. Depending where you're at, and the percentages are going to fluctuate.
Right.
Some markets are, of course, more flammable than others. But I would say yes, I am all for. When you have the ability, you should absolutely, and especially now. I realize, I'll now defer to you that the market is kind of weird right now. We're kind of in this weird period, but I
Right.
would say it's absolutely real estate is absolutely something that you should consider seriously once you get your finances in order.
Yeah. And I mean, if anybody seeing this has ever seen even one of my videos, I don't need to say that, I agree. Right. This is for me, this is just number one. And it's just been proven time and time again. So that I'm not going to beat a dead horse.
Yeah.
Right. So let's switch to something that I've been seeing quite a bit. For the old school, we had to research and learn and get into these systems that were kind of clunky to deal with our finances and investing, especially as far as stocks and trading. Right now, we have what we could think of as, the gamification. That's what they call it, right? On TV, you see them talking about the gamification of investing, right? So the RobinHoods of the world, all right? And now, they call normal people who trade, retail traders. That's the term that they use, right? So give us a little bit of your perspective on what you think about, the RobinHoods and, retail traders. Is there a place for these, the gamified systems? What do you think about all this?
As a student of the stock market and just reading, this is, to me, it's a natural evolution of investing. Robinhood represents power to the retail investor. I mean, if not used properly, it can be dangerous. Don't get me wrong. In the hands of an Yeah,
anything, right?
in the hands of a novice, absolutely. I mean, if you decide, oh, I've got, $5,000 I just got from my taxes, I'm gonna YOLO, this stock. I mean, that's not the purpose of Robinhood. Okay, because access to the stock market is important, right? In the early days of the market, you needed a broker, right? So in the 20s, the 30s, 40s, you needed a stock broker to allow you to trade securities on an exchange. So if you wanted to buy shares of Coca-Cola in the 30s or 40s, you had to call your broker and put that order in. Now you are your own broker. So like I said, the power that these platforms give to the retail investor is immense. But like like the old Marvel movies, with great power comes great responsibility. You know, so if you've got funds, don't YOLO your retirement funds and your Robinhood account. Okay, I would say do your due diligence, right, and ensure that you're educating yourself, because I know even within the Robinhood platform, there's educational material.
Yeah,
Education yourself on what margin is. If you want to open a margin account, which I would highly discourage. Okay, what is what's a market order? What's a limit order? There's a breadth of terminology with the stock, with trading, that you need to know.
right.
And to and we talk about day trading. Again, I would highly discourage against that unless you're a professional trader. I mean, there are professional traders out there that do very well day trading. I'm of a long-term mindset, right? Uh, and I believe over time, uh, a long-term mindset is going to win over someone who's in and out of stocks. And I
Right.
know now we have this commission-free trading, but who knows, that could go away.
Yeah.
So day trading can be very expensive. I know I've dabbled in it in the past, and I really didn't like the way it felt. Um, so I'll be very cautious with tasting success, and it can give a false sense of I know what I'm doing, right? In my opinion, an investor with a long-term mindset will be more successful. All right, and I just believe in the long term, you're just learning more about yourself and you know what you're capable of with investing. So
Got you.
yeah,
Got you. All right. So let's get into a little bit of macro here. We were talking about, what is happening right now in the financial world, right? There is a ton of talk about recession, right? Um, I just want to, grab your opinion. Nobody can tell us 100%.
right.
We got tons of talking heads on TV. We might as well be some talking heads too. Let's.
Yeah.
What is your opinion? Are we actually headed to a recession, and why do you think?
If you read the signs, right? If you read the economic indicators, it would suggest that we are heading toward a recession, right? So last quarter, I believe GDP declined, and two consecutive quarters of GDP decline is the definition of a recession, right? So this quarter, if we decline again, we will be mathematically in a recession.
Okay.
Stock market is also an indicator. It's what they call a leading indicator and we've been in a decline since December of last year, roughly November, December. And I don't believe we're in a bear market in those indexes yet. Definition of a bear market is 20% down from the recent highs, right? So I don't believe the Dow's there yet. S&P is there. NASDAQ might be there, but we've been in decline. And you see corporate earnings, your giants, Amazon, our significant others loves Amazon and Target, right? And those two companies have posted declines in their last quarterly reports. So those are indicators right there that things are slowing down. They are certainly slowing down. So would I say we're headed towards a recession? In my humble opinion, I would say yes. Could I be wrong? Absolutely. Could we turn this around? We could.
Yeah.
But the problem is there's a lot of headwinds, and with us cutting Russia out of the oil supply, I don't see fuel prices dropping anytime soon,
Right.
which is one of the main ingredients in ensuring that prices are
That's right.
rising right now. So
So, I mean, you bring up gas prices, that obviously hurts the consumer, right? So let's suppose that, hey, either we already are in a recession or we're headed there, or we're about to, make a great reversal and, not, we'll just, kind of glide at the recessionary level and then come back up or something like that. But either way, the consumer needs to know how to prepare, right? So what do you think? How would we prepare for what's going on in the market right now?
so I go back to the question you asked me earlier, right? So what kind of tips would I have for financial education? And it's, hey, pay off that debt if you have the ability, right? You want to be saving, right? You want to have that emergency fund. Um, I've heard about companies laying off. I mean, there's no guarantee right now. Right? There's a lot of uncertainty out there. So if you can tighten your belt buckle, start clipping coupons. I mean, just the simple things that you can do to ensure that the money you can keep more of the money you have coming in
Right, right,
during this period. And it's an absolutely great time if you can be liquid and invest in safe vehicles like treasuries or corporate bonds that are going to increase in value because interest rates are going up. The only way the Fed can, well, one of the main tools that the Federal Reserve has to combat inflation is raise interest rates essentially, right? So
Mhm.
that's so you see interest rates rising, and I know in your field, they will continue to rise until inflation is under control. So if you have the ability, get into some safe, like I said, securities, debentures, debt. So you want to own corporate debt, government, municipal bonds,
Right,
government
right.
bonds, that type of thing will be safer than investing in a declining stock market,
Gotcha.
in my
Okay.
opinion. Yeah.
All right. All right. I appreciate your opinion on that. Appreciate some of those thoughts. And definitely moving on to the final question, though, right? In these days, you can't have a financial discussion without touching on cryptocurrency or crypto assets, Bitcoin, right? You just can't do it. They have been for what is it, 12 years now. Bitcoin has been stomping out ground as one hell of an asset, right? So, what do you think about it? What do you think about the volatility of it? What do you think about its long-term, um, future? Where are you at?
I like cryptocurrencies. In my humble opinion, I believe they're still in their infancy. Um, I think it's something that the general public still doesn't truly understand. But as we continue to become more globalized in our economy, I feel that crypto will prove to be more really valuable in the future. I mean, if you just look at history of currencies, I mean, we're still evolving, right? And the more global we become, we are going to need that kind of common currency that isn't tied to a sovereign country or nation, right? It's kind of tied into the strength of the global economy, right? So I I I, I like crypto assets. The volatility is going to be there, and I mean I'm not too well versed in crypto, but I believe the volatility is just tied to you know the general lack of knowledge by the general public. I
Okay.
just feel I think I mean, you see sovereign countries are using cryptocurrency. I mean, I'm not too well versed in crypto, but I like it, and I think I continue to be an investor in crypto in the future,
Right.
even with the current volatility. Yeah.
So you think it's a little bit of just kind of hedging your bets, just to making sure you're not completely out of the game if,
Yes.
it does become stable and it becomes recognized as like a true asset, a true investment vehicle. You've already got a little bit of skin in the game.
Absolutely.
Okay.
Absolutely.
I hear you.
Absolutely.
Well, I definitely appreciate the conversation. I definitely appreciate you coming on the Jerome and Real Estate channel, dropping some good nuggets here. Why don't you go ahead and tell the people how they can get a hold of you if they do want to have one of these free conversations you just promised them?
Yeah.
Right.
Yeah.
How do they reach you?
So the best way to reach me is LinkedIn at this point. In a couple of weeks, I will be with Northwestern Mutual in the Colorado Springs area. So you can, like I said, reach out to me on LinkedIn, and I will absolutely respond to you. My email is steven.thomas688@gmail.com. If you have any questions about or just want general knowledge, I will absolutely point you in the right direction. And like I said, I love being an asset for people, a free asset. I'm not in the business of, padding my pockets. I want you to pad yours to
Nice.
ensure that your financial future is secure. So I'm all about education, and so hit me up. I'm always available. And Jerome, I really appreciate you having me on.
My pleasure. My pleasure.
Yep.
Hey, listen, I will be posting all the information to be able to connect with Steve in the description of the video. So if you want to reach out to him, please check the description. I'll have all that info up. All right. So Steve, it was great chatting with you, and we're going to turn this one off. Don't forget, if you're out there and you're watching and you did like this video, please give it a like and then give it a subscribe. You don't want to be missing the weekly tidbits and information that I put out. Usually it's on Thursdays at 8 a.m. Appreciate it.